And welcome to today's class. Once again, my name is Jason Sheppard. I'm an IRA specialist here at Newview Trust. We're here to talk about tax liens and tax deeds today. Just a primer for today. Do want to let you know we are hosting a special class next week with a special guest talking a little bit further in depth with tax liens. So this class today is meant to just be a high level discussion. And we won't be doing any questions or anything like that because next week, and go ahead and register for next week's class, we will be hosting an expert to talk a little bit further in depth. So that way, instead of me trying to answer your question, you can have that expert absolutely answer that question for you. So before we get started, I did want to hit that right off the top. So please go ahead, go to newviewtrust.com, find our educational resources, and go ahead and register for next week's class. So that way you can get that alert and get everything all squared away and get those next level questions answered for you. So we'll go ahead and get started. And as always, we do want to remind you, we are here to serve as your custodian for alternative investments. We do not provide tax, legal, or investments advice, however, nor do we actually sell the investments. We purely custody IRAs, education savings accounts, health savings accounts, as well as 401ks for our clients to choose their own investments later on once the account is open and funded. We're not here to do any sort of advising. Always want to remind you that also self-directed IRAs are not a special type of retirement account. It's simply just reminding you have the full control of your investment opportunities that are there for you to invest in. You're there to direct all investment decisions. And as a reminder, self-directed is not a special type of a retirement account. All IRAs could be self-directed. You just need a company like Newview's to go that extra mile for you to register those different alternative assets outside of the stock market. Speaking of outside of the stock market, the benefits to self-direction is diversification. Instead of just diversifying within different asset classes in the same stock market that still kind of ebbs and flows with the whims of that, this gives you the true power to diversify. You can lend, you can buy real estate, you can invest in private companies and startups and things like that. You can also diversify within asset classes. You can lend short-term and long-term on different promissory notes. You can buy real estate or tax liens in any state that allows it. Because we'll talk about this later on. A lot of counties do have online auction platforms for you to invest in those. So it truly gives you the ability to diversify your portfolio. The best also is tax savings. Anything you're currently investing in right now with personal funds, this gives you the ability to not have to pay capital gains or not have to go through the struggle of setting up a 1031 or working with a 1031 exchange and only delaying those capital gains for a short term. This gives you the ability to essentially put off capital gains almost permanently. And then any growth is only taxed at regular income tax later on when you pull that money out of that account. It also gives you that ability to compound and grow that interest over time because you're paying less out of each transaction. So it just gives you more to reinvest and redirect later on. And lastly, this gives you the ability to invest in what you know best, right? Especially those that are investing in real estate. If you're here for tax liens, this is what you're researching day in and day out. So why hope somebody plays the stock market well enough for you? Why not invest in what you're researching, invest in what you know best, and bet on yourself, essentially. So before we get started, we only have a week or so left before the tax filing deadline. So we do want to remind you it's not too late to make those annual contributions for 2023. If you haven't filed your taxes, you can still make that 2023 contribution as well as your 2024 contributions. I do have the current limits for 2024 posted there. Most of these are between $500 and some of the employer plans are right around $3,000 less for last year. So for example, traditional and Ross, if you haven't filed your taxes, you can still make about a $6,500 plan contribution. And if you are over the age of 50, you still have that catch up opportunity for solos and simples and those. Last year, it's 66,000 as that contribution limit. As always, talk to your tax professional. There may be some other tax liabilities and other things out there before you make your contributions. This is purely just reminding you what those upper limits look like from there. So when you are investing with your IRA, do remember there are people restrictions. I can't do business with close family relatives in your direct lineage. So parents, grandparents on up, kids and grandkids on down, as well as spouses of any of those parties and business partners. Transaction restrictions. Obviously, you cannot buy a property that you plan on personally owning or living in personally. Is purely for investment purposes. And then investment restrictions. You can't buy life insurance. You can't buy collectibles, memorabilia, art, things like that with your IRA funds. So that's not what we're here to talk about. We're here to talk about tax liens. What are they? Like I said, this is going to be a high level class. Basically, tax liens were set up to make sure that the counties can still receive the revenue for those income taxes, regardless of whether the property owner has the ability to pay those. So it's a great way for them to keep their budget balanced, but a great investment tool on the back end for those looking to invest in those. It's basically just unpaid property taxes. So the counties will set up some sort of auction, whether it's an online auction or in-person auction. And we'll talk about that later. And then they'll start the bidding at right around 18%, and then it's negative bidding. So the more bids, the lower that interest rate's going to be. That interest accrues until the taxes are paid by the property owner. So it's a great way to earn those long-term or even a short-term interest gain to where you can make a pretty fast turnaround depending on whether or not that property owner can satisfy that tax lien. It does give you do want to make sure you do have priority lien position. Make sure you're always on the top there. So if you have to move on to the very next step where you can apply to force a sale or auction of that property to make sure you get whole, you want to make sure you're in there. So that way the property taxes get paid, the tax lien gets paid, then the bank gets paid and everything from there. And there are different time requirements, for those sales and auction periods. Check with your local jurisdiction. There's a lot of different information out there. Every county, as we're all accustomed to, every county does things slightly differently, no matter what state or municipality you're in. So definitely check your local guidelines and make sure you're up to date with what that looks like for your local county. How to buy tax liens, like I mentioned, some counties do have online auctions. Some counties have live auctions. Or you can purchase them after the auction if nobody ends up bidding or winning those. And obviously, you're going to want to do extra due diligence because any property that you win the lien on, you could potentially end up owning later on. So make sure you're doing your due diligence. Make sure you know a little bit about the property. You can speak with the counties ahead of time to know the properties that are going to be coming up at the auction. It's also good to know how many people typically attend the auction. As well as how many liens are typically on the auction block, whether that's online or live, just because you want to make sure you know how competitive that lien marketplace is going to be later on. Tax deeds, that's another term that you're going to hear out there. It does represent the public auction of a property as a result of an unpaid tax. Some states only offer tax liens, some offer tax deeds, and a hybrid. Some people use them interchangeably. So make sure you understand what you're purchasing, what you're bidding on at the auction, because there are different slight rules depending on what you're purchasing at that point. The other benefits to these, any overages in the auction price can be claimed by the other lien holders. And then also some states do offer a redemption period for the property owner or a lien holder to pay unpaid balances plus taxes and fees to redeem their interest in the property. So make sure you know the rules. Obviously, speak to your local county. Speak to if you're going to be bidding on tax liens outside of your local county. Make sure you're fully aware of what your rights and what you're purchasing later on to make sure it matches what your end goal is in investing in that tax lien. Lastly, we do want to touch on checkbook LLC. As a result, like we mentioned before, one of the most common methods with tax liens is an in-person property auction. So a lot of counties and a lot of municipalities do require you to pay those tax liens at when the time comes that you win that auction, essentially. So checkbook LLC, a lot of our clients that are investing in tax liens will set up a checkbook LLC. Just gives you that speed to transact with your local municipality. Basically, what a checkbook LLC is a single member LLC that you create that is wholly owned by your IRA with yourself as a managing partner. Obviously, check with your local jurisdictions because each state has different terminologies on those. So essentially, you're creating an LLC owned by your IRA with yourself as the manager. You will have a bank account that is tied to that LLC. That you can transact out of. So you could potentially write checks right there at the county auction when you win those tax liens. It does come with record keeping opportunities there for you. So do make sure this is something you want to get yourself into as you are required to make sure that all records with that LLC is maintained. So you want to make sure you're keeping good records and prepared to produce any sort of records should those be requested. The IRA owner manages the tax lien process directly through the LLC. So it's owned by the LLC, not your IRA. So it's a little bit of a I don't want to call it a shell game because that makes it sound like it's you're doing something wrong. However, the IRA owns the LLC owns the tax lien, and that's how you transact in and out of that account. So you're responsible to track and hold those liens, make sure that all the funds in that checking account that you set up owned by the LLC stays within that environment. You're not commingling funds. And then annually you report the value of that LLC back to the IRA. And also, should you need to take any sort of distributions or any money out of that IRA, it does have to flow back into NewView and then request the distribution from there. You can't just write yourself a personal check and then hope to clean it up later. You want to make sure you're going about it the right way. So we're happy to go further in depth with any of these tips and tricks here for this type of investing. So if you do have additional questions, go ahead and scan this QR code to schedule a call with myself or any of my team members. We'll be happy to walk through what accounts fit you best, as well as walk through if you have additional questions about the checkbook LLC or buying tax liens. Once the account is open and funded, we're happy to have those questions with you and start walking you through those next steps so you can make your first investment in your self-directing journey. Also, I do want to remind everyone to join us this October for altcon. It's October 17th and 18th here at Orlando Marriott downtown. We're going to have not just investors talking about tax liens, but various asset classes out there. It gives you a great overview. Obviously, we want to keep having you join our webinars each week. However, this will give you a great opportunity to network with other people that may be in this space, as well as learn about other asset classes that you may or may not be aware of. We're just scratching the surface of self-directing, even though it's been around for 20 plus years. So go ahead, register now. We're excited to have you guys come down and visit us in Orlando. October 17th and 18th once again. So register now so that way you can save your spot. That is all for today. As always, stay up to date with New View Trust by all the social medias there. Go ahead and scan that QR code. One last QR code. We won't continue to inundate you with those. However, this is the best way to stay up to date with New View, whether it's social media, new videos, classes, or the podcasts. Continue to learn more about self-directing and the journey there. So that is all for today. Once again, my name is Jason. I'm an IRA specialist with New View Trust. I look forward to seeing you next week with our further in-depth discussion